Good morning. You've tuned into ET Now. This is Buy Now, Sell Now. I'm Karunya Rao and with me is Varun Hirimat. Hi Varun, good morning. Why don't you take it forward with the headlines?
Hi Karunya, good morning. Let's begin. NBFC stocks today, they're definitely hogging the limelight. Just look at Bajaj Finance, Bajaj Finserv, a whole host of other smaller ones as well. Obviously, this is on the back of the RBI recommendation which came in from the IWG, and experts see huge potential now for M&A and value in this space. We then have RIL, which is back in focus this morning. CCI has cleared the Reliance-Future Group deal. It is official. The High Court has reserved the order on Future Retail's plea. So that's some good news coming in for Reliance shareholders. Then on top gear, we had Motherson Sumi just on the channel this morning talking about $36 billion in revenue by 2025. That's in 4 short years. It's got that stock in focus, and the non-auto businesses are really the ones that are going to drive the growth for Motherson going forward. We then have Sunil Bharti Mittal, who is talking about a tariff hike needed as pricing is unsustainable. Market conditions should drive the decision. So let's see, maybe we're going to all have a more expensive phone bill very soon. And finally, as far as headlines are concerned, US vaccine chiefs, first American may be vaccinated on December 11th. That is 2 weeks away, so 3 weeks away, pardon me. So very soon, it seems that the vaccine will also be making its way all over the place. But back to you, Karunya. Okay. Let's in the meanwhile also just take a quick look at the markets and see how we're faring this morning. Global Qs were flattish to slightly positive. Futures were up around 90 points this morning. So we didn't have any big boost coming in for the Nifty, and that's kind of reflecting in where we are right now. We've kind of given up some of that morning gain we saw because we opened with such positive breadth, and we've now slipped into just about flat. 12,859 is where we stand. The mid-cap index is up nearly 0.7%. The auto index is losing today, down 0.2%. The bank index, surprisingly, based on this big RBI announcement, is actually down right now a whole percent. So banking stocks not liking that announcement completely. With that being said, though, look at the winners today. You have a Bajaj Finserv, you have an IndusInd Bank and Bajaj Finance. 3 big winners from the financials. Then you have 2 pharma, Divi's Lab and Dr. Reddy's. On the losing side, you also have some banks. So it's interesting. In financials, the breadth is really now separating. HDFC is down nearly 4%. ICICI Bank is down 2%. M&M is down 2%. Axis Bank is down nearly 2%. So that's why that bank index is down a whole percent. So we're flat for the day. Bank is the major loser as far as the market breadth and mood is concerned. Okay, so now we're also going to take a look at the house views. Like I said earlier, there's a big announcement from RBI. There's going to be a lot of changes. People like Bajaj Finance can now possibly try and become a bank. So it's very exciting times for them. CLSA says that this is a very progressive move. However, it's going to be difficult to operationalize. They think it's better for the smaller banks and SFBs. If you saw the way Ujjivan and Equitas all reacted this morning, 15% up, 16% up. For larger NBFCs, there'll still be more supervision required in CLSA's view. Then Macquarie says, despite this announcement, just stick with HDFC Bank and ICICI Bank. It's a bold move that corporates can get licenses, but again, the ultimate decision of proper and fit criteria lies with RBI. We then have Investec saying that it's very positive. It's going to further accelerate the shift away from PSU toward private banks. And it's very positive for IDFC and Bandhan. That's that the banks can exit the NOFHC. Finally, Motilal says, again, a very progressive move. It'll accelerate the market share shift, and it'll do a lot of consolidation. So it'll create consolidation, and potentially a lot of M&A opportunities may also be increased in the system. So those were the house views on this weekend's RBI announcement.
All right, thanks for that, Varun. Let's shift gears and talk about a big development that has happened on the back of which you have Reliance Industries and Future Group stocks reacting quite positively. Competition Commission of India has approved the 24,713 crore deal by Reliance Industries to buy the retail assets of Future Group. It seems an interim breather coming in for Future Retail, though its petition is pending decision before the Delhi High Court, where it opposed the Singapore arbitral order, which had halted the deal earlier. However, Reliance is rallying in trade on the positive CCI news. Abhimanyu joins us for more details on the story.
Amidst objections raised by Amazon, CCI has approved the Reliance-Future Group deal, which means that Reliance Industries can proceed to buy Future Retail's business for 24,713 crores. Meanwhile, the Delhi High Court has also reserved its order on Future Retail's petition against the Singapore Tribunal's arbitral order, which had favored Amazon and had halted the Reliance-Future Group deal. Amazon has refused to comment on the CCI nod and may wait for the High Court verdict. Amazon had urged CCI and SEBI not to allow the Reliance-Future Group deal in view of the arbitral award, which had halted the deal. The Delhi High Court has already reserved its order, in which Future Retail had argued that a foreign investor cannot acquire controlling stake in an Indian multi-brand retail as per law. They had also claimed that Amazon was acting like the East India Company by destroying competition in the Indian market. They had stated that the Singapore Arbitral Tribunal order was inapplicable in Indian jurisdiction. They had also claimed that over 10% investment by Amazon would have violated FEMA rules and Amazon cannot control their deal. However, Amazon had claimed that Future Retail had engaged in insider trading and had requested SEBI to probe the deal with Reliance. They had also stated that under law, the arbitral award is binding on Indian soil until set aside by a court of law. Amazon had also claimed that Bianis were a willing party to the arbitration which had taken place in Singapore and cannot refuse to honor the arbitral award now.
Thanks, Abhimanyu, for that. Let's pull up the BNSN quiz for the day quickly to remind our viewers that they can still participate if they haven't already. We asked you this morning which of these NBFCs is the largest in consumer appliance financing, the options being Bajaj Finance, Cholamandalam, Capri Global and M&M Financial. You still have time. Go on to our Twitter handle ET Now Live and post your answers in the comment sections of the quiz. Moving right on, we have Kunal Bothra with us. Hi Kunal, it's good to have you back. The markets continue to hover around that 12,800 odd levels. Talk to us about how you're reading into the sort of jitteriness that we're sensing from traders and investors at this juncture, and by when do you see perhaps the Nifty meaningfully breach the 13,000 mark?
So, good morning, Karnya. Great to be back again after a short break. So, I think the market texture is still very positive. And, the fact that you're still asking that there are many traders who are still on the sidelines and still doubting the market rally, that itself makes this rally more strong and more, I would say, durable. What we've also seen is that in the last 1,000 points or 1,500 points of the Nifty rally, you've already seen many intraday, corrections in between, or I would say intra trend corrections which have happened. It's not been a one-way rally into these names. It's been a rally which has gone through those minor bit of corrections in between. And I would still sense that the more the number of traders who are still sitting out or still waiting for the markets to correct and go through a sharp correction, they could be in for a surprise, because the trend on the Nifty and the indices is still very strong. This has been a classical rally and a classical trend. The reason why I use classical is because of the way the sector churn has happened. It started with the Nifty ITs and the pharmas, I think the month of April and May. Then it trickled on to the other, rate sensitive sectors like the autos. Then cement participated. The bank Nifty apparently was one of the late movers. And now when the bank Nifty is actually taking a pause, just as an example like today, you have the Nifty IT and the Pharma index managing to support the indices. So now when you have these strong support from the other sectors, it's very difficult for the index to try and go through a turnaround mode. For the turnaround to happen, you need to have some strong selling pressure which has to emerge from many of these sectors as a unison. And I think till the time it doesn't happen, the trend will continue. So I would maintain the stance on the bullish side for many of the stocks and sectors. It's just that those momentum stocks and sectors, they can keep on varying with every trend of the rally, but the bias and the direction has to be on the upside for the indices.
Now, thanks for that, and request you to stay on with us. We're taking a break here. When we come back, we'll address viewer queries and more updates. Stay tuned.
Hi, welcome back. You're watching ET Now, and this is Buy Now, Sell Now. I think Kunal and Ashish are both still with us, so let's get to them for their high risk and low risk ideas. Kunal, you first. What are you pitching today?
So again, going with the all buy theme, so two buy calls. First one is about Sun Pharma. Now, as I was mentioning earlier, that the Nifty IT and the pharma stocks are looking quite strong today. Sun Pharma is one stock which I believe has a lot of potential. The stock has been nudging around this 520 mark for quite some time, but some of the chart patterns indicate that the stock could now form a inverse head and shoulder pattern. So I'm anticipating that formation and a breakout pretty soon for the stock. Hence a buy on Sun Pharma. Targets of 550, stop loss at 485. The second would be from the mid cap pack. It's about CCL products. We don't talk of the stock often, but on the charts, it's formed a classic triangular pattern, chart structure on the daily time frame. 265 or 266 is the breakout point for this chart on the medium term time scale, and I think a post breakout above this, it could lead the stock to a fresh 52-week high for itself. So would suggest about CCL products for a target of 290 and stop loss to be kept at 255.
Thanks for that. Let's get on with our queries then for this morning. We have Yashoda, who's written to us on Twitter. He bought 300 shares of JSW Steel for 308 rupees, bought 100 shares of Raymond at 437. What's the outlook for medium to long term? So, Kunal, let's take turns, beginning with JSW Steel. What do you think Yashoda should do?
Well, I definitely think that you should hold on to your investments on JSW Steel. In fact, in this Diwali pick as well, I'd given a lot of metal stocks as a buy, because I, for one, believe that the metal rally has just started, and this could be a big multi-month, multi-quarter, multi-year rally as well for many of these auto stocks and many of these metal stocks. And in fact, you've picked out one of the top three names from the metal pack. So we generally restrict our conversation towards the Tata Steels and the JSW Steel. So I think in that regards, you've bought a good stock at a good price. I think if the stock comes back to, say, any kind of short-term support levels, say a 330, 345 kind of levels, then I believe you could look to purchase or add your quantity further. I for one believe that JSW Steel should rally substantially from current levels over the next 6 months to 1 year. So if that's the kind of time frame, then you should definitely hold JSW Steel. Raymond, on the other hand, I think has just about seen a very recent breakout. I think your purchase price is at 400 in levels. The stock is at 340, 330 kind of rupees. It's also just marginally broken above its 200-day moving average, I think, in the last couple of days. So there's been a very recent breakout for Raymond. I would advise that give it maybe some more time. Let's watch for another couple of weeks. If the stock sustains about this 200-day moving average, then I believe that there could be a strong case which could be built that the stock can come back to a 400 to 440 kind of level. So I would suggest a hold on Raymond, and maybe for the next 1 or 2 weeks, keep a watch. Don't add or average on it as of now. If the stock sustains about this 200-day moving average, then I believe that could be a perfect signal for you to look to average further and then hold on to it from a slightly medium-term view.
Okay. What are your views, Ashish, in that case, given our viewer query? Okay, I think we don't have Ashish yet. So let's move right on to the second query then. This is from Sachin Sule. He's based out of Nagpur. He bought Reliance at 1980 rupees. He wants to know whether he should continue to stay invested or exit. And if possible, please give a target level, he says. Kunal, over to you. Reliance Industries, what's your take?
Yeah, I think the recent underperformance of the stock has brought in a lot of circumspect and I would say doubt into the stock prices. But this has happened. These are classical signs of trend signals for stock prices when it goes into a ferocious uptrend. Majority of the I would say market participants, they tend to miss out on the ferocious rally, and when the stock starts to correct or dip, traders are caught buying at high levels, and then they keep on questioning that whether the medium term trend is intact or not. So I think these are classical signs of trend for which one is witnessing even for Reliance Industries. I, for one, believe that the stock is a good long-term buy. I think what the stock has done in the first half of the recovery of the post-COVID, I think from there on, it's shown its leadership quality. Now, the market always gives more premium towards the leader stocks in any stage of the rally. And I think the behavior of what Reliance Industries has shown on the long-term basis and the breakout and the initial move, I think gives it more emphasis that it has to be held on to it from a longer term view. So until and unless your view is very short term oriented, then I think then the view could be, then my advice could be a bit different. But if it's more of a longer term view, and if it's something to do with a portfolio structuring as well, then I believe we should definitely hold on to Reliance Industries even at current levels. And in fact, if the stock assumingly falls say another 5 or 7%, say comes back to 1800 or sub 1800 levels, I think that's a very good level for you to look to average further.
Ashish, hi, you're finally with us. What's your take on RIL at current levels?
Well, I think Reliance remains fundamentally a very good story. The run-up was very significant and very fast, and also became a very consensus buy on the street. So I think the nature of this bull market really has been that the consensus is never to be bought. You have to buy into fear and not buy into greed. At 22,300, there was a huge amount of greed into Reliance. So I think stock has corrected because it was actually overbought and overowned. Uh, Having said that, the fundamental strength remains because when it comes to digital space in India, I think this will always remain a one large, fundamentally good stock. And the way they have segregated the three businesses, oil, telecom, and retail, and the investments which they have come into especially into telecom and retail, are going to augur very well going forward. So there is no denying the fundamental strength of the company. Yes, valuations and the speed of movement was very strong, and like I said, it became like a consensus buy on the street. So therefore, some fizz had to come off. I think it has come off already. One can't rule out some more downside, but I think from here onwards it remains a good stock to buy, and any downsides could be used to accumulate more.
We're out, Ashish. Before we let you both go, Ashish, just want to know what are your trading or rather investment bets for the long haul? Which are the stocks you're looking at right now?
Well, I think technology remains a very good space to be in, and the very safe and a good investment idea is HCL Tech. The company has been doing very well on the back of new deals which they have signed in, and also the cloud migration and cyber security products which the company specializes in. Margins have been improving continuously, and the good thing is that it still trades at a significant discount to both TCS and Infosys. Going forward, we expect not only the movement, not only the upward movement in earnings per share, but also this discount to the other two majors, TCS and Infosys, to shrink. And so I think this remains a very good stock idea, very safe because it's still quoting at a very good valuation. The recent acquisition of DWS Group also augurs very well because they get a very good presence in Australia and New Zealand and a very good consulting business of the DWS in their on their books. So I think here the target is of 1100, which is a significant upside from the current levels, around 30% upside from the current levels. And I think with a very limited downside, this is a very good stock idea to buy. The other idea, which since mid caps have finally started moving, and investors who have some risk appetite can look at Jindal Stainless Hisar. The company again has been doing very well, and the margins again have been improving, and also the government policy is helping them because there is the duty benefit now with the duty imposition which the government has done to prevent imports is helping this company and its products. The company again is at a significant discount to what should be a fair value, and here we have a target of 200, which is again a significant upside from the current levels. Being a mid cap, yes, it could be volatile, and so therefore only the investors who can tolerate some volatility and risk should go in it, but the upside from here looks very significant. So investors who are looking for mid cap ideas can go with Jindal Stainless Hisar.
Sharing that, unfortunately, we're running out of time. So a big thank you to you both for joining us this morning. But my colleague Abhimanyu is currently reporting on something very important. The Supreme Court is pulling up the Gujarat and Delhi government for rising cases seen in those states. Let's go across to Abhimanyu for more.
Well, Solicitor General Tushar Mehta, appearing for the union government, agreed that Delhi needed to do a lot more and pointed to the meeting which was conducted by the Union Home Minister on the 13th of November, and various directives were issued. The Delhi government also submitted that they have reserved beds for COVID patients in all hospitals now. However, the top court observed that they are hearing a huge spike in COVID cases in the current month and have sought a latest status report from all states. The court observed that they fear worse things may happen in December. States are not well prepared, and observed that the situation in Delhi has worsened in the last 2 weeks, and questioned the management of the state government as far as the management of the pandemic is concerned. The court raised questions on how hospitals are treating patients and whether there are enough beds. So clearly scathing observations from the top court on the management of COVID cases by Delhi and Gujarat governments. However, all states have been asked to file replies in this regard now.
Right, Abhimanyu, thanks so much for that important update from the Supreme Court. And on that note, we'll slip into a quick break and be back shortly. Don't go anywhere.
Welcome back. You're still watching Buy Now, Sell Now. Let me just quickly remind you of our quiz question today. This morning we asked you, which of the following NBFCs is the largest consumer appliance financier? The options being Bajaj Finance, Cholamandalam, Capri Global and M&M Financial. Let's move right on and talk about a big story that my colleague has been tracking, an ET Now news break that has been confirmed. A big overhaul of the banking sector that may be underway. RBI's internal working group has recommended that corporates be allowed as promoters of banks. Moreover, the panel suggested that large NBFCs can convert into banks if they fulfill certain criteria. Ruchi joins us with more details on the recommendations from RBI panel. Ruchi.
In what is going to completely change the banking landscape in the country, one of the panels of the RBI has suggested game-changing recommendations in the banking space. In fact, these recommendations will ensure that there is a complete overhaul, a complete change and a review of the extent of ownership guidelines and corporate structure within the private sector banks. In fact, the biggest of them all is what we told you early in the morning. That's when we told you that policymakers were contemplating a more liberal policy that will allow Indian corporates to become part of the financial system. Now we're given to understand, of course, policymakers are going to move with abundant caution in this matter. The RBI is going to take a look at these recommendations that have been made by the internal working group. But having said that, policymakers do find merit in the argument that if we move with abundant caution, if we have proper fit and proper guidelines, proper corporate governance structure as well, proper rules for related party transaction, then perhaps the Indian banking sector can open its doors for corporates. This is going to be a very significant development, and the Indian policy makers are going to take a lot of cue from the kind of norms that we've seen globally as well. The second of them all, and this is also a very important point, we're given to understand that under these norms, NBFCs that are well run, that have an asset size of close to 50,000 crore rupees, can now become banks. NBFCs so far have had only a soft touch regulation, and once they become banks, you can expect these NBFCs, because they are so important to the system, that will also be guided by the larger banking principles as well. Besides that, for payments banks as well that are intending to convert to small finance bank, a track record of close to 3 years of experience as payment bank will be considered and will be sufficient. All in all, these norms are very important. This will really change the way the Indian banking system works, the Indian banking landscape works, especially coming in at a time when many believe there is a need to make Indian banks globally competitive, and these recommendations will perhaps go a long way.
Well, clearly today is all about the banks and the financial sector. In light of that, we caught up with Tamal Bansopade and Sandeep Parekh to get their views on the recent recommendations. Let's listen in.
Well, let me take the last part of your question first. How soon? As you all know, it's an internal working group, 2 members from the RBI board and the rest from Reserve Bank of India senior executives, executive director and CGM, etc. So it is not an official RBI document. So let's make it very clear. It's just there have been discussions, and there have been sort of, I would say, asymmetry and inconsistencies in RBI's approach to licensing over a period of time. So iron out all this committee has been set up, and there's an internal committee, internal group, which does not necessarily mean that each and every recommendation will be accepted. We need to wait and watch. That's point number 1. So how soon? I don't think it's very soon. Market is jubilant, celebrating. Yes, let it celebrate, but we need to wait. Second is NBFC, larger NBFC you spoke about with 50,000 crore asset book and 10-year track record. Now, in some sense, allowing larger NBFC and allowing corporations into banking, in some sense, they are interlinked, because some of the larger NBFCs are run by corporations, not all by them.
All right, well, that was a very interesting excerpt. But time for a quick break on Buy Now, Sell Now. Stay tuned.